Airbnb sellers and higher interest rates will crash Canada's real estate market. 2023 Canadian housing market. There is a growing body of evidence suggesting that we are currently witnessing a simultaneous occurrence of two interconnected trends. Firstly, the impact of a looming recession coupled with a massive increase in the number of Airbnb listings creating more competition and lower prices and revenue is beginning to pose financial challenges for Airbnb hosts. Many hosts are experiencing reduced income from short-term rentals and may find it increasingly difficult to cover the expenses associated with maintaining Airbnb properties. As a result, a growing number of Airbnb hosts are considering selling their homes, contributing to the overall increase in for-sale property listings in certain U.S. cities. These combined factors indicate a convergence of circumstances that are currently unfolding in the U.S. market, which could be an indicator of things to come in the Canadian housing market. Additionally, as interest rates and mortgage rates continue to rise, the cost of borrowing for existing homeowners is increasing. Consequently, this can have adverse effects on affordability, potentially forcing some homeowners to sell their properties. This influx of sellers, coupled with a slowdown in home sales caused by the higher rates, can lead to an oversupply of homes in the market. In the news articles that follow, it seems that, more likely than not, this scenario is already playing out. Fall in Airbnb listings revenues raises fears of housing market crash in the United States. What about Canada's housing market? According to an article in Newsweek published on June 28, 2023, declining revenues per listing on Airbnb, the popular accommodation rental platform, have led to fears of a housing market crash comparable to the 2008 subprime crisis in some cities. While data from All the Rooms indicates a nearly 50% decrease in revenues per listing in cities like Phoenix and Austin, others suggest that the drop in revenues is much less. Nick Garley, CEO of Reventure Consulting, believes that the decline in Airbnb revenues could prompt homeowners to sell their properties, potentially triggering a housing bust in certain cities. All the Rooms data shows significant drops in revenues per listing in cities such as Sevierville, San Antonio, Nashville, Denver, New Orleans, and Seattle when comparing May 2023 to May 2022. Garley points out that the large number of Airbnb rentals compared to homes listed for sale could create a downside for home prices if struggling Airbnb owners decide to sell. However, more experienced Airbnb hosts might be less inclined to sell due to lower mortgage rates and reduced financial pressure. Garley suggests that an Airbnb crash could help rebalance the real estate market, opening up opportunities for new homebuyers and investors in 2023 and 2024. The Airbnb sell-off could just as easily occur in the Canadian market when a recession hits, sparking the same downside risk for home prices. May Airbnb homes will be sold as a recession takes hold. Travel is one of the first things that drops during a recession. During periods of economic downturns, individuals and families often cut back on discretionary spending to cope with financial uncertainties. Travel, being a non-essential expense, is typically one of the first areas people scale back on during a recession. This reduction in travel demand can have a significant impact on the short-term rental industry, such as Airbnb. In this case, we will explore the potential scenario where many Airbnb homes are sold as a recession takes hold, highlighting the factors that contribute to this trend. Reduced travel demand. In times of economic uncertainty, people tend to prioritize essential expenses over discretionary ones like travel. During a recession, individuals and families may cut back on vacations, business trips, and other non-essential travel plans to save money. As a result, the demand for short-term rentals, including Airbnb homes, will decline significantly. This decreased demand could put pressure on Airbnb hosts, leading them to reconsider their investment in short-term rental properties. Financial strain on Airbnb hosts. Recessions often bring financial challenges, such as job losses, reduced income, and increased uncertainty. For Airbnb hosts, this can translate into lower occupancy rates and potentially impact their ability to cover mortgage payments. maintenance costs, and other expenses associated with maintaining an Airbnb property. As financial strain increases, some hosts may find it difficult to sustain their short-term rental business, leading them to consider selling their properties. Shift towards long-term rentals. In a recession, the dynamics of the rental market may change as people seek more affordable housing options. Some Airbnb hosts may opt to convert their properties into long-term rentals to ensure a steady income stream. This shift can be driven by the need for stability and consistent rental payments during uncertain economic times. As more hosts transition their properties from short-term to long-term rentals, reducing profitability for existing hosts. Financial security and diversification. For Airbnb hosts who rely heavily on short-term rentals as their primary source of income, the recession can serve as a wake-up call to reassess their investment strategy. The instability of the short-term rental market during economic downturns may prompt hosts to seek more secure and diversified investment options. Selling their Airbnb properties can provide hosts with a lump sum of cash that can be used to strengthen their financial position, pay off debts, or invest in more stable assets. Market correction and buyer opportunities. A recession often results in a downturn in real estate markets, including the vacation rental sector, as the supply of Airbnb homes increases due to hosts selling their properties. Market forces may push prices down. This creates an opportunity for potential buyers, such as investors or individuals looking for a vacation home at a lower price point. The combination of increased supply, reduced demand, and lower prices may encourage Airbnb hosts to sell their properties rather than endure financial struggles during the recession. As the economy experiences a downturn and people prioritize essential expenses, travel, including short-term rentals through platforms like Airbnb, is likely to be one of the first areas that individuals cut back on. The reduced demand for Airbnb homes, combined with financial strain on hosts and the potential shift towards long-term rentals, can lead to a scenario where many Airbnb homes are sold during a recession. Hosts seeking financial security and diversification, coupled with market corrections and buyer opportunities, contribute to this trend. Higher mortgage interest rates and higher interest rates in general will cause excessive home sales and lead to a crash in the housing market. Higher mortgage interest rates and higher interest rates in general can create headwinds for the housing market, potentially leading to excessive home sales and a crash in the market if the conditions persist. Headline news articles suggest further tightening by the Bank of Canada and therefore further mortgage rate increases in the months to come. Mortgage costs surge 30%. Homeowners urged to brace for more increases. Top central bankers suggest further tightening measures to combat inflation. Concerns of recession in Canada rise as persistent inflation points to higher rates. Recession risks. Higher interest rates and a substantial number of forced sale properties could all lead to an oversupply of homes on the market for sale, which will drive down real estate prices and further worsen the recession and Canada's economic climate. If you found this video and information useful, please smash the subscribe button and hit the notification bell so we can keep providing you with timely information you can apply on a daily basis.